Profit. How do you know if your law firm is profitable? Episode 62. Are you ready to make your law firm a profit-generating machine that will free up your time and skyrocket your impact? With more than 2 decades of business growth experience and having proven that you can be successful while prioritizing your family and your impact, introducing the Profit with Law podcast. I am your host, the creator of the Firm Differentiator 10X Effect, Moshe Amsel. Well, hello and welcome to another episode of Profit with Law. I am your host, Moshe Amsel, and I'm super excited to be here with you for yet another great piece of content. Hopefully, deciding whether it's great is in the eye of the beholder, or in the ear of the listener. So I hope that you feel that way, and I hope that this information is helpful for you. We're also in the second week of February of 2020, and I cannot believe how quickly this year is going. We're just about halfway through the first quarter, and I want to check in and see, how are you doing? By now, people who have decided to make fitness a priority in 2020 have already stopped going to the gym. And unfortunately, that's just the way it is. That's the way of life. And in business, it's no different. Yeah, you might have started the year off very invigorated, very motivated to make this the year for your law firm. And you may already find that the things you started to implement in January, the things that you said you were not going to repeat, the habits that you said you were not going to repeat, you indeed are seeing those patterns reemerging. And I only say this because it's just kind of like a check-in. Do you want to look at that and revisit it? And I think that you should. I think that it's time to get re-inspired. We have to do that constantly for ourselves. So maybe go back and review the goals that you set out for the year and the goals that you set out for the quarter, and just do a check-in and say, hey, am I getting there? Am I getting closer to these goals? And if not, what action do I need to take? It's still early in the quarter. It's not, we're almost halfway, but we're not quite there yet. You got this entire week before you hit the halfway mark, and so much can happen in a matter of 6 to 7 weeks. So there's a lot of time left to be able to fix it if you've kind of gone off course. If it's not business related, if it's personal related, if you had personal goals, physical fitness. I know me personally, with my physical fitness goals, I was hoping to be significantly lighter than I am right now. And I unfortunately didn't step on the scale recently to share numbers with you, but I'm approximately 230 pounds. My end weight goal that I want to be at is 185. So I have another 55 pounds to go. I started at almost 260 pounds. So I made a lot of progress starting in mid-2019, but I've kind of hit a rough patch. And I'm not talking down to you. I'm with you in this process, because I personally need to do a better job with my meal planning, with my diet, and I'm still going to the gym twice a week with my personal trainer, but I'm not going on the Peloton as often as I wanted to, and it's quickly becoming time for me to start really training for triathlons if I want to take that seriously in 2020. So I have some personal goals that I have for my physical health that I've kind of let things ride in January, and I'm going to try to get really serious about that now in February. So I'm with you right there in the trenches, trying to fight the fight. Even with building my business, there's so much going on here at the company. And the Dream Builder Financial on the accounting side, Profit with Law, the podcast. We're really planning some great things here for the podcast for it to grow and for us to improve on the content that we're bringing to you. And most importantly, our Law Firm Growth Summit brand is, and I'm calling it a brand, even though we've only hosted one event, but the event was so successful that we are now planning an entire series of events around it and I'm talking about virtual events, which we're going to start sharing information about as we solidify the plans. But think of the same thing that we did over the course of a 5-day summit, perhaps doing like a 1-day event that is very super focused on one specific topic, one specific thing. So that is some really exciting stuff that we have going on. And we just brought on another team member as well, and they're getting up to speed. So there's a lot of stuff happening here that we're excited about that's going to improve the product that we're bringing to you. It's going to improve the podcast, going to improve the summits, and anything else that we're providing. The last thing before I get into the content is that I'm doing a series of free coaching calls. So over the course of February, I have 20 slots that I opened for free coaching sessions, and being open, honest, and upfront with you, the free coaching session is intended to find the right people for a group coaching program that I'm doing. So starting on March 1st, I'm going to be doing a 90-day law firm turnaround group coaching program where we're going to go through your entire business and fix it and turn it around so that you are set to completely kill all of those goals that you're trying to achieve. And there's no magic pill. It's not like you're going to work with me for 90 days and then immediately you're going to be absolutely, completely successful. There's a lot of things that you're probably doing in your business, in your law firm, that are habitually bad, that are not good for morale, for culture, for your staff, that is not as efficient and productive as could be. So we look at everything. We look at your sales, your marketing. We look at how to measure your numbers, identifying your key performance indicators so that you know how to be able to take the vital signs of your business. You know, I'm a paramedic, so I'll talk in that language. But when I go to check on a patient, we check their blood pressure, their heart rate, their rate of breathing, their work of breathing, their lung sounds, their sugar level. So we have all these tests that we do. And the purpose of those tests is to see how they're doing. If any of those numbers are out of whack, then we know that there's a problem that needs to be fixed, and we could dig deeper into that, and now we know where to look, right? It's the same thing in your business, right? You have to have a series of numbers that you can look at to check and see, are we healthy? Are we running the way that we should be, the way that we want to? And now based on those numbers, is there something in particular that we need to dive deeper into? And this is really important. So we're going to cover that. And, most importantly, it's going to remove a ton of overwhelm that you have in your practice. There's, the biggest thing that prevents us from moving forward is just not knowing what's the next thing we should do. You probably have some time on your hands that you end up frittering away with doing things that make you feel busy, but are not actually moving the needle in the direction that you need with the growth of your firm, because you just don't know what are the steps you need to take to grow the firm. And that's really what the program is intended to do. It's intended to remove that question mark and to really give you marching orders moving forward. So if you're interested in working with me for 90 days to completely turn around where your law firm is headed, then you want to take me up on that free coaching session. It's an opportunity for us to connect, to dive deep into your practice, and for you to walk away with a feeling of whether or not we connected, whether or not I am the right person for you to work with you on this specific area. You can go to profitwithlaw.com/free coaching, profitwithlaw.com/free coaching, and that'll take you straight to the calendar. You can book a spot. There's a number of questions that you need to answer as you're going through that process so that I can have all of the information I need going into the call so that we're not wasting time with me asking those questions, but rather jumping right into what your issues are and actually getting some coaching in there. So I'm looking forward to whoever this makes sense for, booking a spot on my calendar, but you want to act quickly. There are only 20 spots that we're offering, and we're already 10 days into February. So time is ticking. As a matter of fact, I can tell you that we've had some of these calls are booked out already from people responding through email. And for this week, my calendar is almost completely booked. So you're already more than halfway through the month. So if you want to get a spot, make sure to act quickly. And once again, that's profitwithlaw.com/free coaching. So let me jump into today's topic. I wanted to talk about profit. And the first question is how do you know if your law firm is profitable? Now, many of you are going to say, well, if I am able to bring money home from my firm, it's profitable. And I don't think that is correct. I don't think that's an accurate statement. And I want to explain to you why. But in order for you to understand this concept, you first need to understand what is owner's pay and how does that differentiate from profit? What is the payroll that you take home? And before you can understand what is the payroll you take home, you need to understand that there's a difference between the tax-related payroll that you're doing versus what you're taking home from the business to live off of. So let's go in that order. Let's talk about the tax side first. I want to enlighten you so that you understand that that's not what I'm talking about, and then we'll go to defining what it is that I am talking about. So there's two different ways that you can have your entity, your corporate entity, be treated by the IRS. You can be a pass-through entity. So if you're set up as an LLC or a PLLC and you don't elect to be treated as an S corporation, then you're a pass-through entity that ends up on the Schedule C of your tax return. Essentially, it's the same as being a sole proprietor. Now, if you are in a partnership, then you also have a choice of being a partner on a Form 1065 or being a partner by being a shareholder of an S corporation. So again, you have the same choice to make. So there's three different ways that you could be treated. You could be a sole proprietor, being paid, filing your taxes on a Schedule C on your personal income tax return. You can be a partner on a Form 1065, where you're then issued a Schedule K1P at the end of the year, and that goes into your personal tax return. Or you can be a shareholder in an S corp, which files a Form 1120S at the end of the year, and then you get a K1 from the S corp for any earnings that you have from that S corp. So now what is the relevancy of these three options? Well, when you are a sole proprietorship, when you're filing on a Schedule C on your personal income tax return, and when you're a partnership, the owner, the sole proprietor, or the partner cannot be on payroll. You don't run their pay through payroll. You simply write them a check. And when you're an S corp, you have to pay the owner, if they're active in the business, a reasonable compensation for the work that they're doing, and it has to be paid on payroll. So right there's a differentiation on how you get paid, right? So in the sole proprietorship or the partnership, essentially, if you're taking all the cash that's left in the business and bringing it home, then you're taking home all the cash that's also all of the pay that you're reporting to the IRS that is being taxed with self-employment tax, as well as income tax, as well as your state and local taxes, right? At the same time, if you're an S corp and you put yourself on payroll, your salary might be set at, say, $80,000 for the year, but you might be taking home $150,000, right? So what happens is you take home that $80,000 through payroll, and then you take home the $70,000 as a owner's distribution of profits. Now, right away, you can start to see that if you're not an S corp, you might think that all of the money that you're taking home would be called profit. And if you're the owner of an S corp, then you would think that the money you take home that's outside of the paycheck would be called profit. But attorney A, attorney B, in these two scenarios, they're earning the same thing. It's just a question of how they're taking it home, right? So neither of those are actually what defines whether the law firm is profitable and what is the profit of the firm. So then, if that's the case, how do we define it? And essentially, if you think about what is profit? Profit is the extra money that's left after all of the expenses of the firm have been paid. So all of the revenue that comes into the firm minus all the expenses of the firm have been paid, is what's remaining is the profit. And the profit can now be distributed to the owners, to the shareholders of the business. Think about publicly traded companies. Think about Apple or Microsoft. If you buy shares in the company, then the company announces its earnings. There's a certain amount of earnings per share. And then the company may choose to pay a dividend to pay out some of those earnings to the owner as a payout, as a dividend payout. The profit is that earnings per share, and it's split amongst all the shareholders. The salary that the CEO in the company makes is separate from the earnings per share that the CEO earns for the shares that the CEO holds. Because the CEO is wearing two hats. He's an owner, and he's also an employee of the company. And his salary that he gets paid, so let's say the CEO of Microsoft gets $20 million a year in salary. That $20 million comes off the income statement as an expense before the shareholders get their earnings, before that earnings per share is calculated. How does that translate back into a law firm? Well, if you're working in the firm, you're wearing two hats. You're the owner of the firm, and you're also an employee of the firm. You're also working in the firm. Even if you're not receiving payroll, you're working in the firm. Now, the reasonable compensation analysis that your accountant came up with, this is how much you should be paid on payroll, that is just to allow you to avoid self-employment tax on the remaining amount. But it doesn't really tell you what the true expense of somebody in your position would be. Because if you were to leave the company or not be actively working in the company, you would probably have to hire an attorney in your place. You might have to hire a sales and marketing person in your place. You might have to hire somebody to do the financials. You might, and these are not necessarily full-time employee hires, but you'll have to outsource that work. So you have to look at everything that you're doing and what would it cost to replace you in the firm. And that has a dollar amount tied to it. And it doesn't need to be exact. It doesn't need to be, again, this is for you to be able to start to understand the health of your law firm, to be able to understand whether your law firm is doing well. And the first place to understand that is the firm profitable? Are we making more money than we're spending? And you need to take yourself out of the equation in that calculation. I'll illustrate it another way. Let's say you were going to turn around tomorrow and decide, I'm going to sell my law firm and I want to find a buyer. Well, when you go to sell a business, they're going to value the business based on the profitability of the business, not based on whether it's established, not based on how nice the office is, not based on how many staff members you have, but they're going to look at the business and they're going to say, okay, what is the profitability of the business? And when they look at it, they're going to assume that you as the owner, when you sell the business, are going to be gone, which means that they need to replace you. So even though on paper, the law firm is making $150,000 a year, if it costs $150,000 to replace you, then they're going to be left with zero as an owner. Now, why would somebody want to buy that from you? They won't. The value of that business is nothing. Almost nothing. There's other ways to value a business if it's not profitable, if it has future potential, if they see that they can cut costs, they could do a better job than you did as an owner. There is a possibility that they can still buy that from you. It'll still be worth something, but it's worth almost nothing. At the same time, if the law firm is bringing in $250,000 a year and it'll cost $100,000 to replace you, now you've got a business that's profiting at $150,000 a year. That's the earnings. Then that business probably has a value of somewhere between $500,000 and $750,000. Now you've got something that you can sell. Now, that's also not a dollar amount that's going to excite anybody. So if you're thinking about selling your firm, this is a good exercise you should go through. But this is important for you to go through no matter what stage you're at, because you need to understand the profitability of your business outside of your own pay. And this may sound familiar to this topic. We actually touched on this topic in an earlier podcast. So in the Profit with Law podcast, I believe it's episode 16 and 18, and I'll try to look this up as I'm talking. But we have the 2 episodes that talk about Profit First. And the Profit First program separates owner's pay and profit. And that's the first place that I introduced this idea to you, that there might be a difference between how much you take home and how much is considered profit. So I just looked it up. It is episode 16 and episode 18, and you can find either of them in your podcast player by looking at the previous episodes, or you can go to profitwithlaw.com/016 and /018. So back to what we're talking about. So you have what it would cost to replace you has to come off in order to determine what is the profitability of the business. So now you need to understand how your business is paying you in order to figure out how to calculate this, because this is something you have to do manually when you're looking at your profit and loss statement. When you're looking at your income statement that your accountant might be providing to you, or you might be running from QuickBooks or whatever your bookkeeping software is, and you want to understand how your business is doing, the very first number you want to look at is what's the revenue I'm bringing in. The second number you want to look at is what is the net income? What is the bottom line? If after I subtract expenses, are we making money or are we losing money? So let's assume that it would cost $100,000 to replace you. Now, if you are a partnership or a sole proprietorship, the net income is going to show before your pay. The pay is actually that you take is actually a balance sheet item, not an income statement item, because you're transferring out owner's equity into your personal account. You're devaluing the company by paying yourself. So when you're doing that, it doesn't show up on the income statement, and therefore, when you look at the income statement, so let's say you're looking at 1 quarter, you need to take $25,000 off at the end. So if we made more than $25,000, we're profitable, and then we can look at how profitable are we in that quarter. If you're looking at the whole year, you have to subtract $100,000 from the profit number. So if it says you made $100,000 in profit, all that means is that you were able to pay yourself a paycheck for what you're worth. But you didn't make money from the fact that you owned a business. You could have gone out and got a job and done just as well, if not better, by it being employed by somebody else. So you didn't effectively gain from the fact that you owned the business as a business owner. At the same time, if you had $250,000 at your bottom line, and now you subtract your $100,000 out, now you've made $150,000 profit. That's how profitable the law firm is. That also tells you that you might have extra cash to use to reinvest in the business to grow it. If you are thinking about bringing on a staff member, they're not going to be fully employed and they're not going to be fully busy until they reach a certain amount of work. You have the leeway to do that because you have that extra money. So that understanding this number starts to help you to understand what needs to happen in your business. If you're finding that you're running at a loss, then first of all, you're not paying yourself enough. And that's going to work in the short term, but in the long term, it's going to become extremely frustrating. You're going to get, you're going to lose your drive to do what needs to be done for the firm to be successful. So, the last thing is if you're getting paid on payroll, you're an S corp, you're receiving a paycheck. So now let's say that your payroll is $80,000. Well, there's still $20,000 more that you're paying yourself outside of payroll that if you were to get replaced, the firm might have to pay. And then you have to understand that the $80,000 is already showing on your income statement. It's already being deducted before you look at the bottom line. Now you have to subtract $20,000 more instead of $100,000 to see whether you're profitable or not. So this could be confusing, especially if you're not a numbers person. So you don't need to understand what somebody else is doing. You just need to understand what you need to do. So once again, if you're a sole proprietorship, considered a sole proprietorship for tax purposes, or a partnership, then you need to subtract, when you're looking at the income statement, you need to subtract what it would cost to replace you and or other partners who are working in the firm, who are receiving money as a partnership owner, as opposed to getting paid on payroll. If you're an S-Corp, then you're getting paid on payroll, then you need to figure out what would it cost to replace you, add and figure out the difference between that and the payroll you're actually paying yourself, and subtract that from the bottom line to figure out whether you're profitable or not. So we have now effectively answered, how do you know if your law firm is profitable? And this is essentially the starting point of any planning you need to do, and really starting to check the vital signs of your business. This is something you should be doing quarterly, maybe even monthly. However, there could be months that you're investing in future profitability of the business. So I like to look at quarterly because different things happen every month. Things change month to month. You can have a down month, the next month can be an up month, and the quarter ends up being profitable. So a month is a very short window of time to look at specifically. However, if you start to see a trend month to month where you are running at a deficit, you're running at a loss for multiple months in a row, then you need to really look at your expenses and figure out how to reduce them, or figure out how to bring your revenue numbers up. And bringing your revenue numbers up could be as simple as increasing your collections efforts, could be bringing on new clients, or it could be more complex than that, which is all stuff that we can cover in future episodes. So I hope that this information was helpful to you. I do want to share one thing with you here as we wrap up at the end, and that is the power of leaving a rating and review for our show. People, when they evaluate whether to look at a podcast, whether to listen to it, they're looking to see if we're getting ratings and reviews. They're looking to see what other people are saying. They're crowdsourcing their information about whether or not they should check it out. And we don't have a lot of ratings and reviews. And it's not because people don't like our show. Our download numbers tell us that our show is very well listened to. And we would appreciate it. I would appreciate it if you would take a few minutes to do that for me. The technology today makes it really easy. If you're listening on an iPhone or on an Android, right there in the player, you have the ability to leave a rating and review, and it'll just take you a few minutes. In some downtime when you are just sitting there waiting for something, waiting in a doctor's office, or sitting in line at the coffee shop or whatever, somewhere, you probably can find a couple of minutes to just write something about us, hopefully something nice, and leave a rating and review. I'd love to see those come in, and if we start to see them come in where there's enough of them for us to do this, certainly would give a shout out to the people leaving the rating and review here on the show. So thank you so much again for joining us. I look forward to our next conversation. I hope this was helpful for you. Once again, if you want a free coaching session, and you want to learn more about the 90-day turnaround that we're going to be running starting March 1st, then you want to go to profitwithlaw.com/free coaching, profitwithlaw.com/free coaching, and book a free coaching session with me. Again, spots are limited. We're only doing 20 of these this month. Thank you so much. Take care, and I will see you next time. Have you been enjoying the show? We sure hope so. To make sure you never miss an episode, be sure to hit the subscribe button in your podcast player app. Next week, we will be back with more valuable resources and ideas on how to break the mold and take your law firm to the next level.